Today I'm going to go over a very simple indicator that I use to determine which trades to take and when to take them. It's not very complicated, but it's very helpful in letting you determine what's going on with a particular security that you're looking at. One thing I would like to say as we get started, if you like this video, go ahead and like it and subscribe to the channel. It lets me know which types of videos people like to see and which ones I should continue to make in the future. We're going to try to get all of the build of this indicator into one video, depending on how long it gets. And it's possible that I might break it into 2 videos. And if everybody likes it and you want to see more of how I determine when to enter trades and where to enter trades, I'll be glad to continue to show you some more of my indicators and how I find where I want to make my entries and where I want to put my stops. I use the TD Ameritrade platform for all of my charting. TradeStation is very good also, and there are some other very good ones out there. You should be able to build this indicator in any platform that has multiple choices for you. Most of the indicators that I use, in fact all the indicators I'm going to show you are pretty common indicators. But we're going to start, this is Microsoft today. I'm on the simulated account, so my data is a little bit delayed. But we're going to start building this indicator by by right-clicking anywhere within the chart, going to Studies, and we're going to go to Edit Studies. And what I want to do then is bring up an EMA moving average exponential. That's what I want. So I want to add 3 of those. So I just click on it 3 times to add 3. Now I want to go into the first one, click on the little gear icon, and bring it up, and I want to change the length to 21. Now we're going to go into different lengths later, but 21 is what I typically use in my normal trading. I'm going to change, actually I'm going to leave the color like it is for now. Just change to the 21, click OK. And also I want to leave, I didn't show you this, I want to leave the price as close. I want to go into the second one, and I want to change it to 21 also. But I want to change the price to high. So that's the only difference there. We're doing a 21 EMA and using the input as the high of the price for that period, which I'm on a daily chart. It works on any level, but I found that from looking at a trend standpoint, it does work better on the higher level charts. But you could use it on a 5-minute chart if you wanted to, if you're doing some day trading or some scalping. I just found that it works a little bit better on the higher level. So now we want to go to the third one. We want to change it to 21 also. And we want to do it on the low of that candle. Click OK. And we're going to click OK here so it'll populate the chart. So what you see right now is you have basically 3 EMA lines. They're all 21 EMA, but one's based on the close, one's based on the high, and one's based on the low. And what this gives you is the ability to see where, number 1, what the trend is, and number 2, what your pullback zones are. You see here it pulled back to the high of the high 21 EMA and then took off. Here it actually broke through the bottom. So that right there would have been a bad signal if you were trying to enter here. But you did see some choppiness right here that warned you something was up. Here you came in, you came back to the high, and then you've got a move back above it. Same here. You've got a candle here that would indicate that it's going to be moving higher again. You had a gap down here. Not a lot you could have done about that. I would not have traded this until it got back up into this area, and then I would have really watched it, because as you see, my EMA lines are moving down now. They're no longer moving up. So there's a lot of chopping here. So if you're going to trade in this zone where the EMA lines are just flat, you probably want to do non-directional type trades such as Iron Condors or something like that. When you've got the EMA lines moving up, then you could do directional plays or broken Wing Iron Condors. And the same if it was going down. If it's going down, you could also do directional plays, although I wouldn't trade these because of how long the candles are. It's hard to guess the bottom when you get in these type candles. So this is the first thing that I look at. Now, you can use other EMAs. You can use you could use a 5, although I wouldn't suggest that's way too short. I think you need a little bit longer so you can see the trend. But you could fit this, you could pattern fit this to whatever gives you the best results as far as where that it comes back to. Just keep in mind that if you're trying to pattern fit it, that market conditions change, stocks change how they trade. And just because it worked back through this area does not mean that it will be working a year from now. As conditions change, as the market changes, as the security changes, then different things are going to happen that would cause that to no longer work. So you have to be very careful if you're trying to pattern fit. On some ETFs, I will pattern fit, and I'll have a certain EMA that I use for a certain ETF. But typically, I stick with the 21, and I will go through my trades. I'll go through the stocks that I watch, and I will find out where they are in this pullback zone, and find out whether we're choppy like we are here, whether we're trending like we are here, and then make my trades based on that. And again, I could trade anything from credit spreads to debit spreads to naked puts to strangles to straddles to iron condors, broken wing iron condors, depending a lot on where it is in this cycle. Now, this isn't all that I use. This is the first step. The next thing that I like to add in order to help me trade this, and we'll go back, right click again, go to studies, and we're going to go to edit studies, and I want to look for Keltner channels. You could use Bollinger bands also. I just like the Keltner channels better. So we're going to double click on that, and I'm going to leave everything. Well, actually, let's go in and edit this. I'm going to leave it at a length of, actually, I'm going to change it to 21. I'm going to change the length to 21, and I'm going to change the factor to 2, because what I want to see is when it's 2 deviations above the mean. So I'm going to change that to 2. We've got to work on our colors here. The average I'm going to take off because it's going to be pretty much the same as my EMA here. So I'm going to click the average not to show it. The upper band I'm going to change to white, and I'm going to make it a little bit wider so it's easier to see. The lower band I'm also going to change to white and make it a little bit wider so that it's easy to see. And we're going to click apply. So what does this show me? Well, I've got my EMAs here showing me when I'm getting pullbacks and when I'm in trends. But what my Keltner channels, my 2 deviation Keltner channel shows me is when the stock is overbought or oversold. And I can probably expect a pullback back into this wave here. These are a little more dangerous trades if you're wanting to go long, because once you're touching this 2 standard deviation up, it's a lot harder for it to continue up. It's going to want to come back down. Yes, there are exceptions. You can see here it hugged that 2 standard deviation a long time. And that's just one of those, number one, you don't have to trade this particular stock during this time period. That's up to you. But if you decide to, then you just need to keep that in mind. As it widens out, there's also more volatility if you're not looking at implied volatility any other way. So you could probably get better premiums from selling options when you get a wider channel, a wider Keltner channel. When it's more narrow, you're probably better off, doing calendars or buying debit spreads, in this time frame, because the implied volatility is a lot lower. Now the third thing I like to add, we're going to right click, studies, edit studies, and I've used both RSI and MACD, but I'm just going to put the RSI on this one. So we're going to apply RSI down here. And this gives me, again, another indication of when I might not want to take a trade in a particular direction. Or it may tell me that I might be expecting some sort of pullback. So if you look here, you've got a really high RSI, and I'm over the 2nd deviation Keltner channel, and I'm away from my wave. So this is telling me that there's probably going to be a pullback at some point, at least into this range, which we did eventually get that. Same here, it went over here, but it did continue up. So you can't just, say, oh, RSI's over 70, it's time to go short. It doesn't work that way. This tells you there's the potential for a pullback or consolidation. So what you have to do is you have to look for that. You didn't get it here. Now right here was your first sign that you might get one, but you have earnings. So you can forget about that one. Let's go over here. You know, again, we've got the RSI over. We're above the Keltner channel, and we get this little grouping of candles right here that's telling you that it's starting to lose some momentum. It's starting to pull back a little bit. Yeah, I probably wouldn't have predicted that pullback, but you were seeing the warning signs between these candles, between your RSI and being above the standard deviation here. And when you get back in here, and some of this is released, and you're back into this wave area, then you could start looking for it to go back up again, but it's got a little more room. Now I do, as I said, I'm using the 2 standard deviation Keltner channel. You could use a 3 in addition to this. I don't really see the reason to use the 1 standard deviation, just because really you're getting a lot of that information, you know, right in here in this wave that we've built. So I'm not sure how helpful that would really be. We're probably going to change the colors of these too, just to make it a little more graphically pleasing. I'm going to change this let's change the average to yellow. I'm going to make it a little thicker. Let's change the upside, so I did that wrong. The average is on the close. Okay, close. Okay, it's almost going to leave it like it is. It's going to make the video too long if I start modifying all the colors. But in the future, when we come back and I start to build on this and to show you how I'm making in particular trades, you may see these as different colors, and that's okay. I'm going to go ahead and pull up another security here. I'm going to pull out the SPY ETF to give you a look at it and see what it looks like, and that's not the SPY. Let's try that again. All right. So you see a little more confusion here. It's a little more volatile. You did get pullback here, which is a good buy signal. RSI was good. You had a buy signal here as it pulled back. Right here, I would not have bought this one just because this finished at the low. I probably would have been looking to go long again had this candle been green. But it wasn't green, which has also turned my channel down. And that's a sign that we're probably going back further down. I've got choppiness in here. You know, these right here are questionable candles. There's a good possibility I would have gone long right here. And as you can tell, I would have been wrong. But this, to me, because your wave is heading back up, you're back off that 2 standard deviation. To me, this is a potential long. And our RSI look good. But again, it doesn't always work. Stop losses are important. How you manage your trades is important, because I would have been off here. I would have probably taken this one short just because of the candle, but I would have had a really tight stop. Coming in here, this to me is, you know, we've just switched back to a long. Certainly my bias would be long, and perhaps on this candle right here, I might have considered going long again, but there's a lot of consolidation right through here, so you have to be very, very careful. This trading right through here, right here, and right here is very, very difficult, and I probably would have stayed away. You know, I would have gone long here. When it went above, I went long probably right in here. We had a gap down, and it came back up, and I would have moved my stops up into this area, so I probably wouldn't have lost much money. But again, I still would have been wrong on direction. And one reason I'm pointing that out, and one reason I'm showing you this, is because no trader trades 100%. And no system is simply a buy and forget. You have to keep in mind what the market conditions are. You have to have a trading plan where that you have stops, where you have goals, and so that you know what, when you enter the trade, you need to know when you're getting out of it. And that's very important. You know, this year, I think my trading percentage is about 65%, which is bad for me. Normally I'm over 70, and some of that is I've been trying some new strategies, and some of it is the market has been crazy. You know, especially through this area, it's just been crazy. You know, this, yes, I took some hits here, but you know, I had this that I could work with. I had this I could work with, and even, you know, this up until about right here was workable. So you have to have a plan. You know, these are just tools to help you identify where potential entries are and to let you know where you want to get out. You never want to buy at this high. You know, you never want to buy when your RSI is above 70 and you're above that second deviation of the Keltner channel, and you could add a third deviation that give you an even more of a warning sign that you do not want to be long there. I'm going to keep showing you some other strategies as we move forward in this video series. I was able to get everything I wanted to into this particular video, showing you how I build my Keltner channel and my 21 wave EMA, which is very important. And again, you can use other links and you can specifically fit it to a stock or an ETF. If you're going to specifically fit it so that you're getting the best pullback zones and it's matching the best, then I would suggest using very large stocks or ETFs that have a very high liquidity. Because on smaller stocks, low volume, low liquidity stocks, it's very, very difficult to predict what they're going to do. They tend to jump around a lot more. And I wouldn't put too much faith into, yes, you've custom fit. Let's say you went back through the SPY and you found a 27 EMA wave worked better. Well, again, it may have worked better during this period, but it doesn't mean it'll work better going into the future. So do not think this is a buy here, sell here signal. This is all trading systems, all indicators are just tools for you to make decisions, and you decide where your stops are. For instance, right here, it would be very difficult today for me to say, yeah, we should go long on the SPY. I would really need a pullback at least into this area. But even then, I would have my stop here. So if I went long here and it kept going down to here, I'm going to get out. And those are the things that you have to keep in mind, when you're trading. Now, you could make a strong argument because of how this is an all-time high today. You could make a strong argument that if you could sell a broken Wing Iron Condor, say 28 days out, that had no upside risk, might be a good trade, because it's going to be hard for the market, I think, to keep pushing higher. Of course, as I say that, it pushed higher here, 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 and here. But eventually, it's going to have to pull back into this zone. Now, unfortunately, the zone's also moving up, so it could just consolidate here, which is okay with a broken Wing Iron Condor. You just want that time to erode with it not being in the money. If you have any questions, please let me know in the comments below. Please like this video. Please subscribe. I've got some links to some of my books in the bottom also in the description area. I tried to list them in the order which I thought you'd get the value out of them. Some of them are a little bit repetitious because we're talking about similar types of trades and similar strategies. And I'll also put a link to my website below. That way you get some more information. All of it's free. Just go ahead and check that out. And thank you for joining me today. And please catch me on my next video. Please subscribe. Please like the video. Thanks.